Trendline channels. Now we've talked about trend lines before and drawing them and some of the key ways to draw them. While we're going through the bottom and then we're going through the meat of the trade. So whenever we're drawing a trend line, we're going to be ignoring the extremes. So when we're drawing a trend line down, like on the left-hand side of the screen here, we're going to be ignoring these high peaks right here. Now, what we're going to talk about is trendline channels, and this is just another reinforcement of a specific trend in the market. So we can draw different trendline channels, and we'll start with this right here. So we draw our initial trend line identical. So it's going to be going from the bottom to the first point. And as many times as that trend line is retested or touched again, it just reinforces that particular trend line. We could have also initially drawn one back here, but this would have been made obsolete because the trend started to increase its angle of attack. We also talked about the angle of attack and how important that angle of attack is towards not only the sustainability of the trend line, but the trend line itself. A very vertical trend line is unsustainable, and a more horizontal trend line is often easier to have the market continue on. Now, when we're drawing channels, trading channels, what this does is just adds another layer on top of the trend line. So what we do is we draw on top of the trend line and see how many points at which it touches. So what we get is this band within the market where it's trading. So we see within this band, the market seems to kind of bounce up and bounce down. Now, why does this even matter? This matters because as traders, we're just looking for a hint on what might happen in the market. We're looking on prior information, and what this does is this gives us another set of possible variables to look at. We're looking at not only the retests of the low of the trend line, but now we have an upper band to watch. So let's say the market continues to it bounces off this low here, and then it starts approaching this high. Well, what we want to be doing is paying attention to the possible slight reversal down towards it where it hits the low again. All it is doing is improving our odds when we're trading. We're not using trend lines specifically to trade on this strategy. We're using trend lines as a general guide to if we want to be entering a trade on the long side or on the short side. We want to have that guide for whether or not it's a good time to enter the trade. And the general rule for trend lines is entering on the bottom. If the market is up, entering longs when the market hits the bottom. But this also gives you another possible area to enter the trades. As we know, when the market approaches and or touches this upper band here, that might be a time for in the next few days to only look for short trades, since we're looking at a daily chart here. This is just a great way to understand a larger trend in the market. Let's draw another one on this area that isn't as clear and clean. So in this area, again, we draw our downwards trend line. We have our initial here. It starts to accelerate and then continues to accelerate even further to the point where it becomes unsustainable. You get kind of this arcing of the trend lines as the market accelerates downwards. There's one particular one that I really want to focus on, which is this band, when we get this band of trading. Now, keep in mind, since we use standard methods to draw the upper trend line, we're going from a peak to another peak on the downside to draw our down expected move for the trend line. Whereas when we're drawing our lower trend line, we're not using the exact same hard, strict rules. It's more to give us a general idea of where this market is bouncing within. So when we're able to draw this band of this kind of expected move, when we see the market here not make a solid attempt down to our expected move, and this is not the main trend line expected move, but this is the expected band move, it gives us a little bit of a pause and a worry when we're trading on the short side, because the market isn't doing what we expect to do. It's not doing the expected move. And then we actually get a really interesting thing happening here is the intersection of trendline channels. So what happens is we get our new upwards trend line, so we draw that on the bottom, and then what we get is another band that this starts to trade within. Whereas here, you can see that the market didn't follow the expected trend. Here, it actually, instead of, not only did it not follow the expected trend, but it broke outside of it. It broke out of this upper band here. So drawing the bands just gives us a better understanding of what's happening in the market, instead of just saying, oh, it looks like the market's running away, might have to draw a new trend line. It lets us know that not only is the market running away, but it's running away outside of this band that it's been trading within. All this does is give us a better opportunity to seize some long trades and know that this market is gaining strength in the bullish direction. Trading with these bands can be extremely beneficial to your trading because it gives you another level to base your decisions off of on the strength of the market, whether it's a strong bull market or a strong bear market. One thing to keep in mind is that we are drawing our upwards or downwards directional trend lines the exact same. We're picking the lows, so basically the lowest low to the next lowest low, and we're ignoring any extremes like the wicks or tails on the candlesticks. We want to draw from the meat of the bottom to the meat of the next bottom. Sometimes the markets will get pushed down to extremes during lows of the day, and that's not something that we want to pay attention to. This goes exactly the same for when we're drawing a downtrend line. We're going to be going from the meat of the trade to the meat of the trade. We want to 100% be ignoring anything like this. Don't completely ignore it, but as for drawing the trend line, we can ignore it. When we're drawing the opposite side of each of these, when we're drawing the bands, it's a little bit more flexible when we're talking about this because it's less on specific levels. It's more just to give us a good representation of the area that this market is trading within. These are a little bit more flexible when we're drawing them compared to drawing specifically from one low to another low. We want to get an idea for where this market may bounce off of. These are not hard set levels of resistance and support. They're only expected moves.
Do you have any trading topics that you'd like covered? Leave a comment below and we can dive deeper into all things trading. If you just enjoyed the video, please subscribe or leave a like.